Good morning, everyone. This is a video morning brief of the U.S. stock market Wednesday, Jan 22nd, 8:09 a.m. Eastern Time. I'm Rich Paz for Critical Point. Okay, what we want to look at, this is the hourly chart of the S&P 500, and some things I'm fooling with is I asked myself yesterday, what if the market someday comes back and fills this gap around 5,900 down to 5,850? And what if that was a -7 to -11% down move? How high would the market be? Would have had to move up too. And what we're finding is it could be anywhere from 6,300 on up to like 6,600, okay, to be able to have that kind of a decline. So we're kind of making a forecast of a forecast that if by chance it went that high, and we hadn't seen the -7, -11%, and we don't believe we've found the long-term bottom yet, and still believe history will repeat, that's the kind of decline that could occur later this year on a dollar basis. Okay, we're converting all that percent stuff to dollars. Something to think about. Don't know if that's how it'll really work. At any rate, we can see the market moved above this trend line. Have got all excited, happy-dappy. They're trying to move it into this topping sell level here on this hourly chart. That we know we have a few little gaps here on the way down, but for the moment, looks like it's strong. It's up. It is overbought. It should come down, but overall, the model is saying, well, maybe not. Okay, so let's. I think a lot depends on where we're going with the interest rates and the rest of the earnings season, but also we'll have to keep an eye on the politics moving forward for the rest of this year, maybe years to come. All right, at any rate, this is the level 3 up move, and we took a shot right in here of saying maybe this would be a good place to sell it, and then they just put it up on us anyway, so we were early. If you want to say wrong, that's fine. I don't. I am looking for another chance of a level 3 top today into the start of tomorrow, and it's looking like really for the cash market it probably should be today. The futures might go up during overnight, but it's not looking like both should be up at 9:30 a.m. tomorrow and later. I think we're heading for a top here. I think they're stretching it, and so I think we're going to see a level 4 down move sometime today, tomorrow, and maybe both days. And then we'll reevaluate because they could put it up yet again for what I think is going to be the final level 4. Now, the interesting thing is when we're looking at today, the model's saying really this ought to be the latest allowed for level 3, okay? And this level 4 ought to bring in the end, and the market ought to go down into next week. So I got all excited, was going to try to give you a level 3 alert that I don't normally do, and we don't normally try to be as good of that, picking the actual top as we do for the larger up moves. But when I zoomed out, looking at daily, weekly, monthly data, and price fluctuation, it's really saying, no, this is kind of early. You're really, there's something wrong in here. Some of these level 4s aren't quite right, and there's actually time to move higher into tomorrow. So the best forecast is we're setting up for a level 4 pullback, but what we don't know is might be an important time for level 3, but unfortunately we have to allow for another level 4 pop by Friday to next Monday that could actually bring in a level 3 top. And again, the level 3 is your monthly type sell signal. So if we go to the cash market, what's going on is the model is convinced now to give up on the January 6th not being a level 3 top. It's saying it is a level 3 top. This was not a level 3 top on December 26th. And the next level 3 top was in this range in there. If so, the model is saying, just from a rather wide open, wide-ranging point of view, is it doesn't have top sometime next week. But as it puts it on the microscope, it's saying probably will top by Monday, Tuesday of next week. And yes, it can still top this week. It can top as of today. Okay, so we were early on the around, what was it, January 16th, trying to catch a level 3 top, and we'll just have to live with it, deal with it. And yesterday I said, yeah, I like getting back in and this and that. And I think the way to approach this is, this has been such a strong run because this has even caught many good bulls off guard of just how strong rocket ship this run. When we look at a volume basis, it doesn't look that good. They really are just like panic buying, but what they're finding is the seller is also like in panic mode, refusing to sell anything. They've just disappeared. So it makes it easier for low volume, small group of people to actually shove a market higher. And if they're scared and kind of panicking, the bears need to get out of betting on the downside or getting hurt. Okay, what they'll do is they'll buy some, wait 30 minutes. If no one will sell it so they can buy it a little cheaper, then they just go ahead and bid it up, buy it at a higher price. And they just kind of like create this feeding frenzy, self-fulfilling prophecy. They're just chasing them like a dog chasing its tail, okay? And they just move it higher. And yet there's probably some much bigger sellers out there who are just waiting to pounce someday, but apparently they don't dare do it now. Now, yesterday there was discussion at the is it Walter or Waller? I think it's Walter Thrust Indicator. I let everybody else calculate it, and it's something I look at because it can be quite serious bullish information. It was close to triggering a signal yesterday, and it caught people's attention the prior day. And somebody such as Walter Deemer, one of the old guys in the technical world, was saying he's watching it. He's called it a few times, used it. And he was saying, we got another day today maybe to do it. It didn't quite do it. And I don't know if it will do it, but if it does, I think you're going to see people coming out with statistics saying we want to be bullish the next 1 to 3 to maybe even 6 months. They're going to show you all kinds of statistics of how it can move up a huge amount. So it could be a very bullish indication, even though the market's already up quite a bit. So we do want to watch out for news on it and consider it, okay? What it probably implies, even if we get that signal, rather than just run away higher and higher and higher, we'll probably still get some nice down moves, but they shouldn't last that long. And in theory, the market should move higher over time, okay? At any rate, so we're looking for a sell signal in this black line here. We started right there, and then we bought back, and now we're looking for it again. And I think one way to approach this, if you just get a down day, probably assume we got a level 3 top and expect some kind of a setback. Don't have much here for upside targets and resistance. We have all these old daily highs. We have the record high to watch out for, and the record high is 6,099.97. They seem pretty determined. They want to strike that, and maybe that's where they'll take some profits and knock it back. But what we have to watch out for, and let me go back to that chart, is in the pullback. If this market's really that strong, I suspect this gap that sticks out like a sore thumb, that's going to wait for months from now, years from now. They've already forgotten, given up on it. There's a gap right in there with that moving average. I think that's the most downside you will see. So if riding it from yesterday's price of about 60.50 down to 59.78 doesn't bother you, you probably want to ignore this level 3 top and pull back. And just write it out. If it does bother you, then you're pretty much telling yourself you should be a level 3 player here. And if you don't know how to play without, that's a little bit difficult because I don't think they're done buying. I think it's going higher in the next 3 weeks. Okay, and I don't think this coming level 3 setback will not work all that well. And that normally means the next one will work and can work quite well, okay, in terms of downside. All right, so I think this 40-day moving average, quite possibly the 50, it's going to be some kind of floor price here when they knock it down. And I think as they get it close to the record high, they will consider maybe it's time to sell some. Hey, and as I look at some of this volume money flow we use in the modeling, all they're really doing is getting back in the market. From December into January, they got out of the market. They're getting back in, but they're getting back in much faster than what they did getting out. Some of them are a little bit behind and wish they never sold probably. But most of them actually have done a pretty good job. I think that's why it's rocketing so higher. They're trying to do their damnedest to make sure they didn't make a mistake and sell and then had to buy it back at a higher price. It looks like the bulk of the marketplace has probably bought back at about break even. And that's kind of how I feel what I'm doing. I might be a few dollars ahead. But at any rate, that's what we're looking for is we're looking for a level 3 sell, pull back by next week, maybe into the following week, okay, for a level 3 bottom. And then it's probably just going to go higher again. All right. And I think the NASDAQ 100 futures probably looking pretty much the same story. I don't think there's any great insight to tell us we ought to consider something different. We want to look for a level 3 top. It's going higher this morning. It is behind the S&P 500. It has not been as strong. It had been a little weaker. So there's something going on there where people trading those types of stocks, they're not quite as optimistic. I think they feel like we don't really want to buy this. Okay. But at the same time, when we look at where's the Dow Jones here? The Dow Jones has really woke up, and that probably, but still can be behind the S&P 500 because it took such a beating there. But really getting much more excited here. And I think that might be a sign that on the equal weighted index, they might be buying across the board here is what's going on. And the Dow Jones would pick that up, okay? And there it is, all right? It's having its best day yesterday, and the Dow Jones did, but the S&P 500 NASDAQ did not, but they were good. It was ranked as Dow Jones most bullish and the equal weighted index, followed by the S&P 500, followed by the NASDAQ. On one hand, I guess if you want to nitpick, you'd say that's not the best scenario, not the best demand. But again, it feels like it's more of a feeding frenzy, more of a panic here. People aren't making the best decisions. They're just getting back in the market and may not even know why they're doing it. They just know they've got to do it. They obviously are long-term bullish, or they are friendly, and they don't want to miss out. So this looks pretty good to me here on the overall balance and the Mag 7. We'll take a look at the daily. This doesn't look good to me, really. But at the same time, it can wake up. It can get caught up. The equal weighted index is probably giving us a clue it'll eventually move up, even though they can be at odds with one another. And then this is NVIDIA. This is perking up and looking a little better here, but it doesn't look all that exciting, okay? They're interested in some of the other, and that may be a sign why the NASDAQ is holding back. So if we go to the weekly chart now, I don't think we need to look at those other indexes. I think all we need to look at is maybe the S&P 500 futures can give us a pretty good clue. All right. And it seems like for about a year now, I've been hardly speaking of the futures when over the past 20 or 30 years, it was far more about futures. And I'm starting to think maybe I better swing back there a little bit. Maybe it gives me a little better insight of how this is all working. At any rate, what we have is we believe the market is up and away for the futures, and the cash will be about this same timing, but it's up and away for at least another 2 weeks or like a week and a half, something like that. But it may be up throughout February into March, but currently we're guessing we're going to get a level 2 sell signal in February. That's primarily based on rallying this fast. It's rallying faster than it should, okay? So I think they're eyeing the record high, and they're going to try to put it up into a level 2. We're probably going to cancel this idea of some weird pattern immediately dropping into a level 1 because it's already too strong. So it probably is going up for level 2, down for level 2, and higher still for level 1. That has been our number one forecast for months, okay? So here's the cash, and this is where we can see the forecasting a little better. This little line is telling us look for a level 3 pullback by next week, following week, and then higher. This line is telling us it really ought to go higher from last week right into the week of February 3rd on into the week of March 3rd, okay, for a level 2 top. And it may go to a record high, it may not. Because this has been such a fast recovery, I'm assuming it's going to a record high. Now, what I will tell you, if it goes to a record high, or when it goes to a record high, and that high is 6,099.97, these three levels will be triggered, generated, created as upside objectives. We don't know how long it'll take. It may take all year long to do it, and it may be here in a matter of a few weeks, I'm targeting at least the lowest one by April, May, June, but we'll see. But the point is it can rally to 63.65 to 6,500. Well, isn't that interesting? Because I just said, if the market was going to go back to that gap low, showing on the daily chart, intraday chart, and we were going to get a -7, -11% move into that low, then we need the market to go to 6,300s to 6,500, 6,600, something like that. And lo and behold, here we have an upside potential target to do that. And when we get there, we got to be concerned it's coming all the way back down to 5,900, 5,800. Something's going to go bad later this year, all right? Now, is it possible, I don't know what I'm talking about, that I'm wrong, that we're not even going to get a -7 to -3? Yes, but when we look at that minor long-term stuff, if you will, all right, that LT3 top, which I'm convinced for the U.S. it probably was in December, and latest allowed, I'm convinced if I look at more of a global scenario with Japan and the carry trade blowout and the interest rate problem, the top was probably right there, and then all this action was warning us, market wants to go higher into next year. The problem is, regardless if the top is there in December or back in July, we still need to find a related bottom. And if it's December, until we get a record high, we have to consider it can go down into October. It can go down into April, May, June, something like that, okay, to find that bottom. But if we get a record high, it can still go down in April, May, June, maybe even down in October, but it should not go down as much. It should not be that big a deal. I think what I'm saying is if we get a record high in soon, we might as well assume it's not going below the lowest price of this year right now at 5774.56. You can draw that as a line in the sand that we need to consider. Is this thing getting very, very sloppy on us? And is it because of politics, Maganomics, Trump, or is it because of just the economy? Is it because of something else in the world? We need to reevaluate where we're going for the rest of the year. And we may even have to reevaluate whether or not we're going to be bullish next year. Okay, so not a good thing if it goes below the low, current low of this year. All right, so at any rate, we think it's going up into level 2, pull back for level 2, and it may be a small pullback, it may be a large pullback. Then it's going up into a level 1. Okay, and if we don't get the record high now into level 2, my guess is we'll get a record high then. Then we're going to get that snap back for level 1 and perhaps a snap back for that minor long-term bottom. So indeed, we have to look over our shoulders saying no matter how high it goes, it can come back to 59 to 5,800 this year. All right. If it can get up to about 7,000 sometime this year and then have a -7, -11%, then it's not going back to 59, 5,800. So it's just how bullish will it be? And we just have to realize no matter how bullish we want to be, we can see a -7 to -11%, even though we cannot guarantee it. Okay, so let's keep that in mind. And then this is something new I've given you of the potential upside objectives that we want to try to be friendly here and go with it. We have this weekly indicator was not oversold. It was not mid-range. I don't like this kind of buy signal at all, but it happened. And it's wide enough spread to suggest chance for lingering near-term upside momentum next 1 to 3 weeks. Well, the model's saying, hello, it ought to go up 1.5 to 2 weeks, and it can even go up for 3, 4, and maybe 5 weeks, okay? So we have a technical that's somewhat supportive of this idea we're on our way higher into a level 2 top. And along the way, we're going to get a level 3 pullback. Just as this little dash line right here, I told you, it ought to come down and it ought to bottom last week or this week. Well, it bottomed last week and bam, they put it up. And they were so anxious that they didn't even put in a proper level 3 bottom. They were just a little too early of how they would normally do things when looking back 100 years. But they have done that a few times, and it's always very difficult for us to act fast enough. But lo and behold, I gave you an alert, a warning before that CPI inflation report that we could be up for a slightly earlier than normal bottom, and bam, we got it. Okay, and they put it up, and they have followed through here. They wanted to put it up into the inauguration to make Trump look good. They want to continue to put it up. And we have CEOs supposedly feeling giddy now, is the word on Wall Street, that they think there's good times coming for business. Okay, bad times coming for the people in the country, but it's going to be good times apparently for the stock market. Okay, all right, so here we go. This dashed line has been revised a little bit of what we think is fair valuation, and then we extended this line out to what we think is the final fair valuation, and it does look like the market did dip below it, so it did go along with the oversold, well, not the true oversold, but it was warning us, okay, it's undervalued, it can snap back, and lo and behold, it did. All right, we are forecasting this line can extend higher this year, but we're also forecasting it's going to slow down, it's going to have problems, it's going to have headwinds. I think these CEOs are getting all giddy and are going to go out and hire more people and expand business. I think we're going to find they really don't do it that well. And we're not really going to improve the economy all that well, maybe for the rest of this year. But there's going to be that mentality in the stock market that it is coming. Things will get better, so they want to buy now and then enjoy it later and then sell it later, even if it's doing good probably. Okay, it's just how they do things. All right, so what I've done is I've changed these black lines to give you a general idea what might occur. Down, up, and then it may go down all the way into October, but it may actually, I should draw another little line where it comes down like this, and then it's just up and away. Sometime now, all the way into October, we'll get that minor long-term bottom in, and then the market's probably higher into next year. And then next year on into 2027, somewheres in those 2 years, I want to look for a serious problem in the stock market, and we'll talk about that in the future and later. But right at the moment, it does look like the bulls are in control, and even though this could still be very sloppy sideways now into April, May, June, I'm a little less concerned about that. I think just maybe that lowest price last week is a floor price, and the market's not going below it, perhaps for the rest of this year and on into next year. Okay, I think we found that kind of a concrete floor, if you will. And if it does go below it, then I think we have to be nervous, even more skeptical of up moves, and things could be problematic for quite a while. All right, now what about interest rates that I said is still a driver, and the interest rates are due for a rebound next week. We have the Federal Reserve coming up next week, Tuesday, Wednesday, okay? And then we'll be polishing off the month, and we'll be interested in the PCE inflation report. And then start of the next month, of course, we'll be interested in the jobs report. And then we'll start the news cycle all over again, okay? And then we'll also get some PMIs at the start of next month. And then people may be more interested in those to see if manufacturing is finally going to catch up with this economy. Are they going to be waking up and excited now that they have a Republican in the White House or not? Where are we going with this? So interest rates trade above 4.651% for the 10-year Treasury note. And this is based on futures and maybe a little bit different, but the current high of this week trades above that. We are on a level 3 upswing. That may bother the stock market. That may help pull the stock market down next week if they do it next week, and I think they should put rates higher into the Federal Reserve. But I don't think they're going to put them up much. I think the market really wants to go down into a level 1 bottom, and instead of next week, I think it's really the following week and later, and I think that could actually eventually bring rates lower still. That can help the market move up in February. So I think the upside of interest rates is just going to cause a slight hesitation in the stock market, little dips of level 3s. And overall, I think probably interest rates are going to help the stock market to be higher for those larger trends, at least for February, okay? And if we now switch over to the intraday, for those of you who are interested in the fast stuff here, this is the intraday, and I don't trust it. Every time they start to put it up, they seem to back off. And so I don't know, but if they start moving up towards 4.6, I think that's rather constructive, and it ought to move higher next week. And if it moves above 4.65, that might catch the attention of the stock market. They might not like it, but again, I'm not forecasting a big up move in interest rates. I think they're kind of done for a while here, and we'll just take it from there. All right, the Bitcoin can do well here, okay, and I'm going to do the weekly update in a moment here. I don't think that means anything to stock market, but it is in the news a lot more than it's been in a while, and people are excited what they can do. I don't think gold's going to do a whole lot. I don't think crude oil is going to do a whole lot here. Primarily, we just got to watch interest rates, the dollar, the earnings, and then all the politics, and that's where the new stuff comes in, the fuzzy stuff. That's where investors might do the opposite of what you would normally expect and stuff like that. This is the dollar, and just like the interest rates, it really should go lower over the next few weeks. That can help the stock market, but it's also due for level 3 bounce by next week. So it might, again, set the stock market back a little bit. I think we will see the stock market back off, interest rates and dollar up a little bit next week. But I don't think it's going to do enough to cause the decline I would like to see for a quick sale and a quick buy. I think we'll probably just leave it alone and assume probably going into February, the stock market is going higher still. Past results are not necessarily indicative of future results. Have a great day. Thank you.